If you're watching crypto and finance content at this stage of the market, you've definitely got a lot more sticking power than the majority of traders and investors. This has obviously been one of the most boring times in the market, but typically after these boring times comes a massive move, and that's provided we're still in a macro bull market. So in this video, I want to look at some of the signals that suggest we're still in that macro bull. A big move is coming, and that's for Bitcoin and the stock markets as well. Of course, we need to see more money coming into the space, and it seems like we are definitely seeing some of those signs. Along with that, I've got some cryptocurrencies to get through and the total cryptocurrency market caps. There are still signs that there is one major altcoin season left in this cycle. Before we get too far ahead of ourselves, thanks for joining me here on the channel. It's Jason Pizzino. Hit the like and subscribe if you are new here. I'm putting out content nearly every single day, updating you on the markets, looking at Bitcoin, cryptos, the stock markets, and the real estate cycle. Now, if you've been around a while, there is a sale on TIA Premium. Sign up to the free crypto and economic report and you'll receive that in your inbox within 24 hours. Guys, let's just kick it straight off with the stock market, the traditional financial space, before we get onto Bitcoin and cryptos. The idea is that we want to do all of our analysis day by day, looking at the broader markets and then honing it down onto the smaller markets. Bitcoin and cryptos are the smaller markets. It's important to have a view of what's going on out in the financial landscape. Moving on from that, this is basically one of the seasonal patterns that we're following for the S&P 500 for 2024. We're in that summer season. They're starting to move into autumn now. So summer's nearly over, and typically what we see through the end of quarter 3 into quarter 4 is some sort of correction and then into a nice move after roughly Halloween when we look at seasonal patterns. And this goes back decades upon decades. But just for this particular chart, we're looking at the orange line and the green line, orange being last year, 2023, and green being this year. The seasonal pattern's still on track, and I'll come back to this a little later as we look at the price analysis on the S&P 500. But I want to cover the Zweig breadth thrust. When this signal has come up, every time there's been a very significant move after this signal. And what it means is basically just identifying market momentum. With the S&P 500, obviously there was a pretty significant crash over the 2.5 weeks ago when everyone got freaked out with the Japanese yen carry trade. That dropped into a low on the 5th of August. From that point, there was obviously a ton of talk about another recession coming through. And in terms of the interest rates, they started to freak out and expect a double cut. So this went from 5.5% down to 4.75% to 5%. So looking for a double cut. But since that point, as the S&P has climbed very substantially, within 2% of a new all-time high, you can see that, well, the market has now decided that maybe only a single cut here at 5 to 5.25%. Now, I think as the market continues to stabilize, we'll eventually see a lot of these possible interest rate cuts continue to go and shift towards the right. As I've been talking about all year, the majority of people have been looking for cuts. It hasn't happened because asset prices are still so very strong. So we're looking at the Zweig breadth thrust, identifying market momentum. Essentially, it's when stocks move from below 40%, indicating an oversold market, to above 61.5%. But in this case, they're just adjusting the indicator itself to crossing above 60%, so indicating an overbought market within a 10-day period. So it has to go from oversold to overbought very, very quickly. And as you'll see with the Zweig breadth thrust, let's just call it a breadth thrust, it happens quite often at lows, and the signal continues to flash day after day after day at those lows until it stops to flash so often as you creep towards highs. Look at the GFC bottom. These were very big drops. This to this was over 50%. It started to show up on the way down because you had a few bounces, and then of course the fear in the market continues to drop the market down, but you're starting to get towards the end of that drop. Make no mistake, this was an extremely, extremely fearful time. You had the banks collapsing and everyone thought the world was over. That was like one of the worst times that the markets have ever seen, the economy's ever seen, and the people have ever felt, more importantly. But the signal showed up at the bottom and then the market continued up. from my recounts, this entire period for several years, 2009, 10, 11, 12, 13, as it broke into a new all-time high, the general consensus with was the market and the economy had to collapse again. It was over. We were going to see another double top and it was all going to crash, come back down 90%. Think of Harry Dent calling for another 90% correction. That guy is an absolute fool when it comes to these calls. He's basically been calling a correction for the last 40 years. That's beside the point. Following the Zweig breadth thrust, you can see it happens at the lows. Then the market corrected again and it started to trigger again and it triggered again and it triggered on the breakout of the all-time highs. Didn't happen at this little peak. You had a correction in 2015, it triggered again, and then it stopped triggering on the way up. It triggered again out of the bounce, it triggered again out of COVID. You guys have to remember COVID, even if you weren't trading the markets. Very significant crash here very, very quickly, and it triggered again on the way up, and then it stopped triggering as you get to around the top. 2022, bear market started triggering again as you get around the lows, continued to trigger in 2023 when everyone was expecting another recession, and lately, at the beginning of 2024, and even now as we saw that most recent crash, and if you've been following the channel, I hope you have subscribed as we put out this content almost every single day. We saw the search volume for recession come up as one of the highest search volumes that we've seen in the last 5 years for recession. Zweig breadth thrust occurred again, basically going from very oversold to now a point of overbought. And maybe we're just getting that cool off here in the last 24 hours where the S&P finally had a correction. Went from 5,665 down to 5,582. So a few points sold off there. The interesting thing here, so far, the close was above that previous top there on the 1st of August. So you're still seeing some strength even on the correction. Now, if it continues to correct, no stress. Plenty of support levels to the downside, 5,400 points being the first one. And if it happens to get there, we'll worry about any other support to the downside later on. So what are the 60 plus year results of this indicator that shows up? And after it shows up every single time, you start to see the market go on a very significant move. Well, the results are just down here. Let's have a look at it in a sec, but I think this one is really important. The critical thing to note is that these signals tend to occur within the context of a rising market. Well, if you're going long in the market, you'd want to be on the rising, you want a rising market to go long into. Ideally, there is a signal early in the bull market, which you can see many, many times. Look at the 80s, out of that very deep crash. That was a time when America was looking like it would default on its loans to Mexico. Crazy times. You can't even imagine that happening now 40 years later. The mid 80s on the way up into the peak, out of the Black Monday crash. That was a very quick 50% crash. And so on. We got some more signals here in the 70s. Some were good, some were bad. As it says here, there are occasionally signals that occur late in a bull market. And they typically occur late in a bull market because you're getting the late investors, the late traders, jump on board anytime there is any sort of dip in the market. And they're buying the dips up way too freaking late. And it happens every single time. They miss the bottoms, they wait for the tops, and then they start to get in when they feel more comfortable. And so you see those signals sometimes occur at the peaks, as it says here, occur late in the bull market. But remember, you're not trying to find something that's 100%. There's always going to be some losses. We're not perfect, and no one is going to get 100% in their trading, right? Looking at this, when this signal comes up, 1 year later, 91% of the time, you're getting a win. 6 months later, 85% of the time, it's a win. 3 months later, 83% of the time, it's a win. In the short term, maybe not so great. You don't want to take this signal and look to buy now and exit in a week because there's only a 64% hit rate. So not a great win rate there for a week. But I hope most of us here aren't trying to trade week to week. So just looking at these are looking pretty damn good over the longer term and more importantly, 3 months, 6 months, and 1 year later. So that one looking very, very strong for the stock market. And as I've talked about many times before, when it comes to understanding Bitcoin and crypto, they're not separate to the stock markets. You want to see the stock markets going up and more risk coming into those markets and some of that money flowing out over into Bitcoin and then into cryptocurrencies. So I've got heaps more to get through, but I think I'll leave that for another video. Otherwise, this one is going to go on way too long. The main thing we'll look at is recapping our fear and greed for the day. the S&P 500 back down to 48, just with that slight correction, yesterday being neutral as well. So just sitting in this neutral zone. We've looked at the interest rates and how they've continued to move towards the right again, meaning that there would be less cuts going on. When the market freaks out, you see more cuts coming in. When it starts to stabilize, you see less cuts. So really, I don't think the market knows what it's talking about when it comes to these interest rates, looking at the probabilities here. Nonetheless, we'll find out in 26 days and 17 hours. Now, the VIX has also continued to fall back into our bull market zone. It it did hit its third highest reading in its history, only beaten by the GFC, so the crash in 2008, and the COVID collapse in 2020. Things seem to be back on track within this bull market zone, but this is, I think anyway, a much healthier market to see the volatility spike and then over the course of weeks and months come down back into a nice, less volatile zone of the market. I think that's what's going to occur again as we continue to lead up into this peak of the real estate cycle. Here it is, winner's curse phase. We are in this zone. This particular season takes roughly 7 years. The home builders index is up, house prices are up in the US, and we still have a little more time left in this pump. Now, I just want to show you the home builders index here. This is the market forward pricing whether they're going to see profits for home builders. Home builders in the US will typically see higher prices on the ETF here because you're starting to see more and more profits come into the home building space. But the big one that we've been following is it typically peaks out first, the stock market keeps running, and then you get a rollover of the stock market. Look at this back in the day. You got a peak first, the home builder started to fall, it was already collapsed, and then the stock market peaked later. So this could be our canary in the coal mine when it comes to the end of the cycle here, looking at the peak. Now, if you want to take your trading and investing to the next level, this is something that you want to do on a daily basis, maybe even a weekly or monthly basis to control your assets. Check out TIA Premium. There is a sale on that right now. The link is in the top of the video description. That is on for another 24 hours. So if you are interested, now is that time before the markets really start to kick off, as we've been looking at with the bread thrust and then on the recent days with Bitcoin and cryptocurrencies. Bitcoin is now still sitting at 60,500. Yesterday's bar quite small. However, the volume was lower. You saw a higher close here above all of those previous tops at the last week or so, which might be indicating that it's still getting ready to break out. Now, of course, we could see some further downside. Nonetheless, the trading range is still here between your mid 50s and low $60,000. The next point, and the point that we've been looking at this entire time since the bottom, 61,400, 61,500 for a nice easy round number. Start to get some closes above this level, then it's really looking good for the bulls. Ideally, for the rest of us here who are still watching, hopefully it happens quietly and you can continue to accumulate if that's part of your trading or investing plan while the masses still aren't in the space. And you definitely want to see more of the volume come in on the breakouts, watching down the bottom here, relative to the previous volume. We're not trying to compare it to any sort of the major peaks because, of course, the space is just not as active as it was back in March. That typically happens at the tops. So although the price analysis has remained relatively steady with some very, very small hopium pieces for the bulls here, let's have a look at the Fear and Greed Index. Well, on that correction, the Fear and Greed Index just updated. It's at 34, so dropping from 39 down to 34 on that small day there. It's basically 1.3% drop. Fear and Greed still looking like it is flushing out the weaker hands here. The fear remains in the market even while Bitcoin continues to hold higher prices above previous support levels, key support levels that is, 53.5, 56.5, and now it's attempting that 61.5. Where does that leave cryptocurrencies? The total cryptocurrency market cap also looking relatively strong. From yesterday, not much has really changed. Is it 2.10 trillion, 2.1 trillion, I should say. Basically, not much movement there. However, similar-ish sort of pattern. You can see the reversal here and the higher close relative to the last week or so. 2.2 trillion key level to be watching here. Now, if we take a quick look at the 50% from the low to the current high, that breakdown area, this action is happening above that shorter term 50% level, 2.067. The ideal one here is 2.2. So that's the total cryptocurrency market cap. Now for the total cryptocurrency market cap, excluding Bitcoin, ETH, and stablecoins, this has had a nice rally over the last several days, getting above the short-term 50% level of 410 billion. Remember, we were watching this last week and earlier this week, looking for some closes above the 50%. So this is on track for more strength coming back into your altcoins, obviously excluding Bitcoin, ETH, and the stablecoins. The next level above where it currently sits, 410, more confirmation above is at 480 billion. On the topic of strong versus weak altcoins, this is something that we posted to all of our subscribers on the free crypto and economic report. If you're not subscribed to it, do so now. Link is in the top of the video description. We were watching Aave break out of the 50% zone, and it's basically gone on a pretty significant run. Congrats to our traders that have managed to score some pretty good gains on this run up. Well done to Anthony. Getting Aave there, 50% gains, really, really good work. And that one went out to everyone. Moving on from that, let's just cover XRP quickly, as I met with one of the tradespeople that is renovating a property for me at the moment. Now, he is very into XRP. I've got my renderer here. Should he keep these number plates on the car? The question I put out to people is, should he ditch the number plates or keep the number plates? Just for fun here, let me know in the pinned comment down below. So a quick recap of the XRP chart. Now, we talked about strong versus weak. You can see the difference with something strong, breaking out, going on clean trends, and much easier to trade using your swing indicator or support and resistance levels. XRP, on the other hand, much more difficult to trade, but if you're holding it longer term, well, it's still not the greatest thing. I think it still has the potential to go up. Having said that, it needs to triple against Bitcoin just to get back to its price of 5 years ago. So you can see August 2019, we're currently August 2024, and from the current price, roughly tripling, so 200%, a tripling there to get back to those previous prices. So it can go up. Maybe it goes from 60 cents, it triples to 180. Maybe it goes even further because Bitcoin's going up at the same time, and it goes to $3 to the previous old all-time high. Maybe. It's a very, very big maybe. But you got a lot of overhead resistance here. And then you start to look further back, even more overhead resistance and more overhead resistance, and this becomes almost insignificant of where it currently is. So you can do things the easy way, look for cleaner breakouts, or you can do them the hard way. And so far, XRP has 100%, without a doubt, pure fact, been one of the hardest ways to do it because it just keeps getting knocked down and then hits resistance on the way back up. That can change, and maybe you will see some high prices, but it's entirely up to you and your portfolio. Do you do things the easy way or the hard way? Let's have a look at ETH. It's done it a little bit on the easier way on the way up, but it could be getting met with some resistance here. So the price to beat, still 2,900. Again, not much has happened over the last few days here with the ETH price, basically just range trading $2,500 to $2,600. You guys know the deal. You got slightly higher lows and higher highs here on the swing chart on the 2-day, which is a little bit stronger. So a break of 27 is going to be the first little signs. And then you got, well, the 28 being the previous lows, and then closes above 29 is the real one. So basically every $100, there's something that ETH could hit its head on. We go to ETH BTC, and the trend is, well, back down, lower highs, lower low. 50% to the downside, looking for any sort of support here. It would be back at 4%, 4.1%. So this is ETH versus BTC. And until this can actually find a real base and start to climb back above previous support levels, it is probably just going to bleed out here. So it could turn around. Hopefully it does. Closes back above 4.6%. Going to be really good signs here for ETH. And the last one is Solana. Again, the last couple of days, not much, so really nothing to cover here. It was starting to creep down. Yesterday had a day back up, still within trading ranges. So let's wait until we see a breakout. That price, 0.026. That's going to be my key level right now. That's for the upside. Downside, of course, back to that previous low at 0.0021. And finally, if you are looking to exit your positions in the bull market. I know we talk a lot about nows and the strong versus the weak, but trying to get out of position. A lot of people think it just looks like selling. Sell the lot, sell the top, and you're going to be golden. But like it happens with the lows, sometimes you're buying it around these lows. Sometimes you're buying into the dips. Hopefully you're getting closer to the lows. And then you've got the higher lows that are forming. And then maybe what I like to do is buy on the confirmation of those lows. So you can see some price action here and then a breakout there. I did one of those recently. So if you are a premium member, check it out in Discord. If you want to get on board with that, to have a look at the portfolio, there is a sale on TIA Premium right now. Link in the video description, as I said, to get that coupon code. But what I'm talking about here with the selling, getting out of positions towards those peaks, right? It could look something like this. Maybe not as crazy, but something like this. Check out Solana here. So this is one of the whales selling 86 million of SOL on the way up. Now, of course, I don't think it's going to be this many for all of us. You're probably not going to get this many positions that you need to sell. But this is like a visual representation of what selling might look like to you. Cancel out 2/3 of these, right? You might be selling here, maybe you sell again on the way up, which is this point here. Maybe you sell a little more here, and luckily you might get a few bags at the top. Maybe you're still holding a little more and you start to sell a little bit on the way down, a little bit on the way up, a little bit on the way down, and that's it. You've sold out of all of your position. Maybe that takes 5 trades, maybe it takes 10 trades. It's entirely up to you. Maybe you look to sell 10% of your position every time. So maybe you have $1,000, you sell 100, then another 100, then another 100, maybe on the way down, another $100, or you break it up with the amount of SOL you have. Maybe you got 100 SOL. So you sell 10 at each of these points. Some are lower and some are higher. And so you start to get this average, which if you keep records, you might get an average price somewhere right through the middle. So these initial sales will look a bit crappy. You'll be potentially a little pissed off at yourself, but then you'll look at these other ones and think, cool, I got these ones here. But then you start to think, if only I'd sold them all at this top. That's never the case. It's never going to work out like this. Take this as an example. 86 million SOL, whale sold, 600,000 SOL, but he's not selling all 600,000 at the exact peak because no one knows when the exact peak is. Wasn't selling any on the way up, the first initial run up, but he started to sell on that next reaccumulation before that peak. So maybe that's something to consider if we get this next stage of a bull market. Let that first wave ride. The way I like to do that is use your swing indicator. Check your swing indicator on the way up. Just continue to follow that trend. And then once you start to see that trend break down, start to sell some of those because the major trend has begun to break. But maybe it breaks and then continues higher. You can re-enter positions. So there's no exact science to this. I reckon this is a great example to understand how to maybe set up a plan of how to sell, or at least visually see how you can sell out, get a good average exit price, and just be done with it. It's just a profit at the end of the day. The whole thing is just a business. Don't think of it like it's an emotional attachment to your money. That's my message for today. I hope you enjoyed it. Help out that guy that has the XRP number plates down below. And I'll see you guys at the next video. Like, subscribe, you know the deal. Have a great weekend. Till then, take care and peace out. Balloons.